are in listen-only mode.
Hi, thank you so much for attending our webinar this morning, taking time out of your busy day. Greatly appreciate it. My name is Sandy Vicanti. I am a supervisor here with Iams for Producer Services. And again, just can't thank you enough for taking time out of your schedule this Monday morning to attend just an amazing webinar we have with Security Mutual and their infinite banking or private financing concept and the great products you can utilize for that concept. Before I turn it over to Marty Smith, I want to go ahead and get some housekeeping out of the way first. With Iams, we are builders. We feel like we're with you and trying to help you build your business. And what we do is when you as an agent refer another agent over to us and that agent gets contracted, we give you $50 just for having that agent sign their first contract. When that agent continues to place business with us, and this is indefinite, we will give you 20 basis points on each piece of business that agent places. And again, that's indefinite. It does not take away from your commission. It does not take away from the agent that you referred. This is our way of saying thank you so much for entrusting that referral with us. So as you can tell, the more agents you refer and do business, the more money you make. So again, thank you for that. For any agent who is writing and placing business with us, whether you're new, referred, or have been with us for multiple years, we have something called a marketing reimbursement account. And what we do is for each $100,000 of place premium that you write with us and place with us, whether that's life, long-term care, med-sup, annuity, combination thereof, we will put $200 in a marketing reimbursement account for you to spend on business expenses. So for example, if you place $100,000 with us, we put that $200 in your account. You submit an invoice for $400, and that could be for paper, a seminar, you had to purchase a computer, whatever the case may be. We pay 50% of that invoice, up to that $200. And again, that's just us saying thank you so much for entrusting your business with us. Here's how we'd like to help. We also offer for any new agent in your first 6 months of writing business with us, you are eligible for a new producer bonus. And how that works is for every $100,000 of placed business, again, it could be life, annuity, med-sup, long-term care, a combination of thereof, you will receive a $750 cash bonus. Or you can choose a 2-year producer website. If you think, gosh, I'm going to write and place more than $100,000 in my first 6 months, and you place $300,000, you have an option to choose a $1,500 gift card, a $2,000 marketing reimbursement, which is what we discussed just a moment ago, or a Social Security program and 3,000 piece mailing. If you think I'm just going to go gangbusters in my first 6 months, I'm going to write a lot of that private financing with Security Mutual and Iams, you have annuity business, all that great stuff, you can choose a 5,000 piece mailing and seminar coaching with Matt Gill, a 4,000 piece mailing and seminar coaching with Dave Pimper, or my favorite, a Ritz-Carlton travel package where you design your own trip. For our back office support, when you do submit business, we have just an outstanding, very hardworking, aggressive back office. And what we'll do is we'll help you work smarter and not harder. We have the tools and resources to run quotes for you, do case design, send out forms. We will watch your case from submission to commission, which means once you submit that application with us, we scrub it, we order any exam or labs that are necessary, make sure nothing's missing on the app itself, that same day, send it to the carrier. Go through the case process so you don't have to call the carrier, find out what's going on with your case. We do that for you, all the way to the point where you get paid. We make sure that that commission hits your account. Again, life and annuity quotes, we have sales expertise, and we can help coach. And of course, to get you contracted, we have paperless contracting. And what that is you fill out 4 pieces of paper, circle the carriers you're interested in getting contracted with, send that back, and we'll set you up so you don't ever have to fill out paperwork again. We also have an outstanding creative department, and what they can do for you is from something very simple as help you with postcards, newsletters, any handouts or flyers. If you don't have a logo, we can help create a logo design, or if you do have one and it needs just to be refreshed, we can do that as well. Any type of advertising, brochures, stationery, our creative department can assist you with that. If you need something a little bit more intricate, if you have a website or if you need a website, we can create and manage that for you. Any social media consulting, online newsletters, we will manage those newsletters and make sure they get out on a quarterly basis. And then email marketing consulting. You would need to speak with either Josh or Tasia in our media department, so please keep those names accessible. They do an outstanding job. Anything that you see from Iams, they do. We have several agents that rely on them for their website and newsletter, so cannot stress enough, Tasia or Josh, please give them a call. Our Iams website has just been revamped as well. That website address is www.iamsinc.com. And what you can find on that website, you can find a little bit more about Iams and our history. More importantly, though, you can run quotes, whether they're life quotes, annuity quotes. It has our annuity rate watch on there. You can pull forms. You can look for any current industry news, whether it's on the life or annuity side, especially with the DOL. You have contact information. Anything that you need is right there on your fingertips with our Iams website. So if for some reason you're on appointment and you need to get a quote, again, life or annuity, and it's outside of business hours, you can get the quotes, the forms, everything right there at iamsinc.com. For this, I'm going to put out a poll question. I can't strongly suggest enough that you check yes. What you're doing is just checking that you would like more information on Iams Wealth Management. Because of this new DOL ruling, it has kind of changed for now, even with the delays, the way that we all do business. So here at Iams, we've decided to start at Iams Wealth Management, and that is to specifically help agents increase revenue. Manage money fees. Most advisors, they do see a drastic increase in their fixed and increased revenue as well. When you check yes to this poll question, you're simply just asking for more information, whether it's answering questions about the DOL ruling, getting you more information out about Series 65. With our wealth management, we've seen improved client retention. You're able to offer a full range of products and services. You're not just limited to one specific product or one specific service, and you're completely viewed differently by your client as an advisor. You are now a fiduciary. That sends a strong sentence to your clients where you can say that you are now a fiduciary. So again, when you check yes, it's just asking for additional information that we get out to you, and then we'll be happy to get those questions answered. What we also have that I'll send out a question on is our Life and Annuity Academy. Again, by checking yes, you're just asking for additional information. This is an industry-wide academy we have 2 to 3 times a year. It's all expense-paid trip. We pay for your travel, from airfare to lodging to food. It's a 2-day training that we go over sales ideas and strategies from top producers. We unravel indexed annuities and how income riders may work, when they should work, when you should utilize them, all the different annuity industry threats and trends. We go over top turnkey seminar systems from, the small seminars where you're having them in a library to your more expansive seminar system. Go over large life case marketing, how you can integrate that into your selling. We go over different insurance concepts. Again, what are the best income riders for annuities? We go over those wealth transfer tools, great life insurance, whether it's single premium life or the private financing that we're about to go over, software tools. Again, this is industry recognized. We had over 1,000 agents apply or register for our September Academy. We choose between 35 to 40. I cannot strongly suggest enough that you check yes, that you just want us to send you some more information on this. We also offer, in addition to the new producer bonus, the marketing reimbursement, the different incentives and trips that the carriers have. We offer our own, and February 25th through the 28th, we'll be at Boulders Resort and Spa. It is considered the best hotel in Arizona from Travel and Leisure and a best golf resort in the Southwest. It is a 4-day, 3-night, all expense paid trip for you and a guest. It is an exceptional trip. You can't qualify for it unless you start writing and placing business with us. You have until the end of December to do that. And then we'll contact those who qualify or who make the trip in January. We're looking for anywhere between $1.8 to $2 million of placed business with us. So let us help you get there. Private financing is one of those great ways. So what I'm going to do now is turn it over to Marty Smith with Security Mutual. Can't stress enough the friendship that we have with Security Mutual. They're an amazing carrier that we do business with. They are our top carrier that we utilize for private financing because of how strong their products are. Very easy to deal with in regards to the underwriting side, and then very easy to deal with for your clients in regards to customer service, which we find so important. So right now I will change over to Marty so he can take it from there.
Excellent. Thank you. All right. All right. So are you seeing my screen, Sam?
I am. It looks great.
All right. Very good. Very good. Whoops. All right. So hopefully you're just seeing Marty Smith, Regional VP, Security Mutual Life.
Yep.
I've been with Security Mutual for the past 10 years. During that time, towards the beginning of that, I went to the Infinite Banking think tank with Nelson Nash in Birmingham, Alabama, and that has literally changed my life and the way I think about life insurance. And it was something I believe I'd always been looking for. I'm gonna defer a little bit about talking about Security Mutual till the end, because what I really want to do is excite you about this concept, about the idea of becoming your own banker. It will revolutionize the way you speak to clients. It'll change the way you think, and it'll help you make a lot more money and do a lot more good for people. So, let me see. Let me see what's going on here. All right, here we go. Life insurance is really three things. What we like to say is life insurance is first and foremost a death benefit. Without permanent life insurance, there is no way to guarantee a legacy for your family. I know from personal experience. There is only permanent life insurance will allow you to give your family what you want to give to them and guarantee it there. The second thing about life insurance is if you live long enough, life insurance becomes a deferred asset, especially if you own dividend paying whole life insurance, which is the best financial product that's ever been created, because then you can start accessing those cash values to do exactly what you want. The third thing that life insurance is, and this has to do with the banking concept, is at Security Mutual, we like to say that life insurance is a current asset and should be used as a current asset, to be used just like you were using a bank account. So here, let me start with a story. My son, who was 30 years old a few years ago, I said, son, I've got two questions for you. First, do you believe that Social Security will be around 35, 40 years from now when you're supposed to retire? And of course, his answer was, no, I don't believe so. The second question I asked was, son, do you believe that with $18 trillion of debt that the federal government has, that tax rates are going to go up, down, or stay the same? And he said, of course, tax rates have got to go up. There's no way they can go down because we need to pay off that debt. So I said, if those are your answers, then the truth of the matter is you're going to be responsible for your own retirement. If that's the case, you need to start putting away money right now, as much as you can and as fast as you can, for as long as you can, to take care of that need in the future. Secondly, if tax rates are going to go up, then you need to create as many tax-free dollars as you can for the future. That's where dividend-paying whole life insurance comes into effect. So this was the illustration that I had shown to him here. It was for a male 30 standard. We set up what we call a banking type policy. So we're gonna split the base policy and split it with a paid up additions rider. So we chose a $500,000 death benefit. The annual premium was $4,310. There's the $75 policy fee. That allowed us to put in $7,615 into the paid up additions rider. That bought additional paid up additions of $40,774 for the total death benefit of $540,774. And the reason we chose that was because I said, son, right now you and your wife can afford $1,000 a month. We're going to use that $1,000 a month to provide the death benefit that you need. We're also going to kick in a little more term insurance on the side with another policy to have that out there that you can always convert. But right now for yourself, we're going to create what we call a private reserve or a private pension or a supplemental retirement plan for your future. That $1,000 a month, $12,000 a year is something that you promise that you're always going to pay that premium. So this is what it would look like when we started out. In terms of the tabular detail here, I'm showing you both the guarantees and the non-guaranteed side of the ledger. You can see in year one, we put in $12,000 and total surrender value on a guaranteed basis is $7,251. The annual dividend in the first year is 106. If you add those two numbers up, the total surrender value is 7,357. After that, all bets are off. Then it depends on what the actual dividends that are credited going forward look like. But take a look at year 10. In year 10, we put in $120,000, and what is our guaranteed value? I can't believe it. It's $120,217. Everything that we put in is guaranteed to be there. On a non-guaranteed basis, we have a total surrender value of $128,228. Security Mutual is like most whole life companies there. But where we are different from the bigger companies, we love our guarantees and we supply them. So think about this. We started out with a $540,000 death benefit. By year 10, it's already up to $882,000. One other thing I'd like to point out. In year 11, we put in another $12,000. $12,000 plus 120 is 132. Our guarantee is already greater than what we put in. It's 136. In terms of this over here, we have almost another $26,000, $28,000 that it's grown on a non-guaranteed basis. This is what a bank is supposed to do. That's why we love it at Security Mutual. So now my question is, son, we're going to pay premiums for the next 40 years. What is the cash value in year 40? Well, if we do that, we take a look and it's $1,245,000. Wow. What did we start with? We started with $12,000. 40 years later, we're sitting on $1.2 million. The death benefits was originally $540,000. That's grown 4 times. It's over $2 million. Hey, who says that life insurance can't keep up with inflation? If you design it properly, it always will. If you look over here in this column under contract premium, you'll notice that starting in year 32, we can't put in the entire $12,000. The rules for that, as we like to say down in Alabama, well, that's the government, right? What Security Mutual actually does, our illustration system will always calculate the maximum you can to prevent having a MEC. So that's why the premium is going to be less than $12,000 there. So now, how much do we pay in premiums? Well, we paid approximately $12,000 times 40 years. So we paid a little less than $480,000, and we see that our cash value in year 40 is $1,245,000. Not bad work. But this brings us to what life insurance does, its second main function. If you're still alive and haven't died during the course of that 40 years, son, life insurance becomes a deferred asset. And what we are going to do is we're going to use that money for your private pension, for your private reserve, for your own supplemental retirement plan. We're going to take, at this point, from that $1.2 million, $60,000 a year, right? And we're going to take that $60,000 for the next 30 years. So how much income have we taken? Well, if we do the multiplication, 30 years times 60,000 is 1.8 million. If you look at that, you'll notice that the death benefit was pretty substantial. Starting over here with our 2 million, it starts to go down. It's still 1.6 after 10 years. After 20 years, it's still 1.2. After 30 years, when you're age 100, let's hope you live that long, it's 700,000. It's pretty amazing there. But this is what I want you to think about with life insurance. You put in $1,000 a month. Now you're able to take out $5,000 a month. And best of all, you're able to take it out tax-free. What other investment do you have right now? What other device with any sort of security, any sort of guarantees behind it will allow you to perform this? And is the dividend scale right now the highest dividend scale that Security Mutual has, or is it one of the lowest dividend scales we have? Well, obviously the answer, it's one of the lowest dividend scales because of the way that the Federal Reserve has controlled interest rates. And yet, this is what it is. When interest rates start to go back in the future, what's going to be the difference? Well, obviously, because of interest rates, dividends, things like that, and bonds, whatever, Security Mutual's dividends will also go up too. So, we understand life insurance is first and foremost a death benefit. Number 2, life insurance is also a deferred asset. But more importantly for you in your life, I want you to understand that life insurance is a current asset. So, Mom and I believe that life insurance is so important, and this concept for you to use is something that you should use your entire life. We're going to buy you a brand new car. 5 years from now, that car is going to wear down. I want you to go down to the dealership, trade it in, and get the best, safest car that you want. But before that, what I want you to do is take a look at how much cash value has accumulated in the 5 years that you've had the contract. You put in $60,000. How much is your net cash surrender value in year 5? It's $51,089. Before you go down to the dealership, I want you to call up the life insurance company at Security Mutual. You give them a call. They'll send you a sheet. You fax it over, or you scan it in and email it back over. Anything under $25,000 we'll put in your bank account within the next 24 to 48 hours. Once you get that $25,000, take that loan, go down to the dealership and buy the best car you can. Now, I want you to do this something that's a little different. Pretend that this is just your bank and you're just going to take the money out, but you're not going to put it back in. You're going to buy a car every 5 years for the next 35 years. So what is that going to look like for you? So we're not going to pay back the loan. I just want you to take the money out. So if you do that, you'll notice that, your loan is going to build up and your cash value is there. So the question I have is, think about this. You have a total net cash surrender value in year 40 of $767,000, a total loan of $477,000. So total premiums paid is exactly $466,453 minus the total loans that you took, $175,000. What's the total that you paid? Well, that's $289,000. My question is, you paid in $289,453. Your cash value in year 40 is $767,000. How much did the cars cost? Now, obviously, since nobody can speak with me right now, I would tell you on the East Coast and the West Coast, whenever I ask this question, people say, oh, hey, you have $767,000. Your cars cost you nothing. I said, no, well, that's not really true. In the Midwest, whenever I ask anybody, and the Midwest can start as soon as Buffalo, New York, they say, no, Marty, the cars cost $175,000. But there is another number on this page of what those cars actually cost, and that is under the total loan. The cars, if you took seven $25,000 loans at 5% interest over the course of 35 years on this schedule, that total loan would add up to $477,729. Now, is that number, this $477,000, a real number, or is this just some sort of fake, phony, baloney life insurance illustration number? Well, the answer to that is a real number. The cars do cost $477,000. If you add up the cash value in year 40 plus the total loan in year 40, what does it add up to? If you add those two numbers, the cash value of $767,000 and the total loan of $477,000, they add up to the $1,245,000. And where have you seen this number before? Exactly. You've seen that number. This is the number that this contract hypothetically would have built up to if you didn't take any loans. It's just simple arithmetic. Everything on this illustration is simple, and things add up, subtract, multiply, and divide. That's the way that it works. If you don't pay back the loan, you're only going to end up with $767,000. So, as my son, hopefully not being a fool, would say to me is, Dad, how do I get that all back? How do I get that $477,000 back? And the answer is simple. You're going to buy the 7 cars and you're going to pay back the loans. But you're only going to pay back the loans what the company has asked you to do. Right now, we have a variable loan interest rate of 5%. So that's all we're going to ask you to do. So here we go. Son, you got the car. You're going to go get the $25,000 loan from the company. You're going to You're going to go down to the dealership, buy the car with your trade-in. Over here, you see annual loan interest. It's $1,250. That's just simple multiplication. It's a 5% loan. 5% of 25,000 is the 1,250. If you don't pay the loan in the first year, after 12 months, the loan interest is going to accrue to the loan. So the total loan would be $26,250. All right. Now, could you start paying the loan back immediately? Well, you can. I just can't illustrate it in a life insurance. I don't think any company can illustrate a loan, taking a loan and start paying it back right away. But my question is, if you went to the bank and had a $25,000 loan at 5% interest, how soon would you have to pay it back? Well, you'd have to do it immediately, right? The very next month. If you went to the Toyota dealership in your town and financed a car, whatever, how soon would you have to start paying that back? Well, you'd have to start paying it back immediately. The difference in life insurance is that it's an unstructured loan. Who's in control? You're in control. You want to be in control of your retirement, you need to be in control. That's why you use the dividend-paying whole life insurance policy. So here we go. We have a $26,000 loan. We want to pay it off in the next 48 months. So if we went to your local dealership, bought a $26,000 car with a 5% loan interest, you'd have to start paying back $600 a month. $600 a month times 12 is the $7,200 for the loan. We're going to pay back that $7,200, and then a little bit less in year 4, the $6,555. So that at the end of that period, we're going to have zero loan. Correct? Everybody with me? So how much does it cost to repay the first loan? If you add up that column there, it's again, 72, 72, 72, 6,555. It's $28,155. Again, simple arithmetic. What did you pay in loan interest? Well, it's the $28,155 minus the original loan. It's $25,000. So you paid $3,155 in interest. Hey, that's not bad, right? And that's what you would expect. You've got to drive to work, don't you? Well, I don't. I take the subway. So it's nice and easy for me. But for you, not in New York City, you might have to have your own car like that. So the $3,155 is your 5% loan. But wait a second, $3,155 divided by $28,155, hey, that's almost 11, 12% of that. I thought we had a 5% loan. Oh, I'm sorry. It's not the rate of the loan that's important. It's the volume of interest that you pay. Yeah, practically every 11 or 12 cents of every dollar you pay back for this car is going to be interest. Wow. So my question becomes, what do you actually pay to the life insurance company? What is your net cash outlay for purchasing these cars? Well, that's pretty simple. What we're going to do is we're going to add up this column over here under net cash outlay. So think about it. We've got a $25,000 loan. We paid $12,000 because you've always promised to pay back the loan, right? You've always promised to pay the premium. So 25,000 minus 25,000 plus the 12, it looks like minus 13,000 to the life insurance company because that's what they got, right? Or that's what they paid out to you. The 19.2 over here is just your normal $1,000 a month or $12,000 a year premium plus the $7,200 there, which is what you're going to pay to that Toyota dealership anyway. So it's going to be minus 13 plus 19.2, 19.2, 19.2, 18.55. If you add up those 5 numbers during the time of that loan and the loan repayment, what do you find out? Well, the total net cash outlay is $63,155. You know, you might want to do this yourself to take a look at those numbers. I tried adding them up. I said, no, that's got to be greater than that. That can't be true. No, it is true. The total net cash outlay is $63,155. So what did you pay in premium? You paid $60,000 in premium during that time. What's the difference? It's the $3,155. And where have you seen that number before? Exactly. That's the interest you paid. If you take a $25,000 loan every 5 years for 35 years and then repay the loan plus the loan interest every 5 years, what do you end up with? Wow. All the loans have been paid off. Every 5 years, the loan has been paid off. It's been paid off. What do you end up with? Exactly. You end up with the $1,245,084. Your life insurance policy has been used as a current asset. It's been used as your bank. Think about this. If you go to, anytime you have to make a major capital purchase, you have to pay money for it, unless you're in a different world. So in order to get that money, you're going to have to sell one of your financial products. You're going to have to sell a stock, bond, mutual fund, real estate. You're going to, if you think of your bank account as a financial product, you're going to have to sell part of that bank account in order to have access to those dollars. Over here with your life insurance policy is also an asset that you can use. You can either pay interest to somebody, you can pay cash, or you can become your own banker and use your dividend-paying whole life insurance policy as the funding vehicle for every major capital purchase you're going to make, every car you're going to buy, every educational dollar you're going to spend, for the down payment for your home, for any investment you want to make, and for business equipment. Where should your money come from? It should come from a pool of money that you own and control. That's your life insurance policy. So what is the cash value after paying all the loans? Oh my God, it's a $1.2 million. So think about it. By repaying just the $175,000 loan principal and the approximately $22,085 in total loan interest, you get back $477,000 back in your pocket. If you pay back loans and loan interest to any other financial institution, to the bank, to the car dealership, to any financing company, whose pocket does that go back into? It goes back into theirs. We don't want that money to go back there. We need to become our own banker. So whom does it go back to, son? It's going to go back into a product that you own and control, your dividend-paying whole life insurance policy. And son, what are you going to do if you have the $1.2 million in your pocket, like it was before, without taking loans? You're going to start taking $60,000 a year, $5,000 a month, tax-free, for the next 30 years. Is there a better way for you to finance any purchase? Is there a better way for you to make sure that there's going to be money available to you on a tax-favored basis for your future than by owning and controlling a dividend-paying whole life insurance policy? There is no better way, certainly none to my knowledge, that you can find, with the limited risk, if any risk, that you're taking to own it. I think it's quite amazing, if you take a look, that people don't seem to understand about how life insurance really works here. The longer you have this, if you take a look over here at your annual dividends and you see it grow, the dividends are substantial here. Should you continue to pay premiums into your policy? Well, as Nelson Nash would always say, are you going to use a bank your entire life, or are you going to stop using a bank? You need to create your own bank. Imagine this. The total surrender value in year 36 has the potential to be $1 million. I put in $9,800 in the next year, and what does my money grow to? In addition to the $9,000 I put in, it grows $50,000. Is there any reason not to do this? Is there any reason for have your clients want to put their money elsewhere without, or would you want your clients to take the risk that they have to in order to try to achieve that kind of situation here? Plus understanding that you always have the death benefit behind it. This is why I always say, well, I can't actually say it, dividend paying whole life insurance is the best financial product that's ever been created. Sandy, with that, I think I've come to the end of the road here, and I'll take any questions if anybody has them.
Sure. And in the meantime, I am going to send another poll question out on if you'd like information on getting contracted with Security Mutual, A-rated carrier, just a strong company. Again, not only on this infinite banking, very competitive on their term products and other whole life products as well, and very easily accessible. Cannot stress enough what a great friend they are to Iams. We're grateful for their help. Also wanted to remind you, this is part one of a three-part series. So not only did we open up with this and think, gosh, we don't want to leave you hanging, so to speak, we're going to continue this same thought process in 2 weeks. So if you've registered, thank you. If not, go out onto our website at iamsinc.com, get registered for the next part 2 of Infinite Banking. Let's see what questions. Marty, we have a question from an agent. Can this be done on a juvenile policy?
Yes, absolutely. Absolutely. A lot of people like starting the juvenile policies so that, money builds up for educational purposes there. And we certainly support that. Security Mutual, we have 4 products. We have a 10-pay, and that's available to juveniles and almost right till age 80 there. We have another limited pay product that's paid up at age 65. We have a 100 and we have a 121. Sandy, the only thing I wanted to throw in is I think it would be wise for anybody who's on this call to come to the next webinar that I do, because what I'm going to do is I'm going to go inside and explain just exactly how that dividend paying whole life insurance product works. And I'm going to show you the key to, I shouldn't say the word magic, but I will show you the secrets of dividend paying whole life insurance and how it works and why this is, it can be used so successfully to become your own banker.
And then could you, Marty, for people who are unfamiliar with Security Mutual, we have an agent who'd like to, and we'll send information out as well, but just a little synopsis of Security Mutual and your history.
Sure. Security Mutual is 131 years old in next month. We've paid dividends for the last 125 consecutive years through every war, through every downturn, through every depression that's occurred in the United States history. We have $2.8 billion of assets. We have $30 billion of life insurance in force. We operate out of the same home office building in Binghamton, New York. It's one of the tallest buildings in Binghamton, right on the city square there, with the Civil War monument in the middle of everything. We operate with about 330 employees. In fact, they took a picture of the employees back in the 1930s, just before World War II, and they did another one just a few years ago. And I swear, I see the same people in those pictures from 80 years ago. That's just my little joke saying that there's a lot of experience at Security Mutual. And the way we like to think about it is, hey, you want to brainstorm a case? Pick up the phone and call us. You can talk to our senior You can talk to our marketing people, senior VPs. We're here to help assist you. You have a question about underwriting, or you're out with a client, they're telling you that they are taking some sort of prescription drug with a crazy name on it there, and you don't know what the effect would be on underwriting. Pick up the phone and speak to the underwriters directly. You have a complaint about the company, and I always get in trouble for this. You pick up the phone and you speak directly with the president, CEO, and chairman of the board, who's also extremely accessible for everything. We're a lean, mean fighting machine here, and we're out to help you achieve your goals. So.
We have another question from an agent, and I always find this question extremely important, especially with the infinite banking process. And is Security Mutual a direct or non-direct recognition company?
Come on. There's only one way to be. No, we're a non-direct recognition company. So if you tune into the next webinar, you will see the magic as it appears there. Yeah, we're definitely non-direct recognition. Although, if you think about it there, the problem is you can't show the, as I like to call them, the magic tricks if you have direct recognition, because again, the dividends are either terminated or reduced on loaned funds there, so you're unable to illustrate it and show how it works. But Security Mutual, for the last few sets of products, we've all been non-direct recognition.
Another question is, back to the juvenile policy, is there a payer's benefit, meaning the policy is paid if the payor dies? I don't believe there is.
No, we don't have that. We don't have that option there. No.
And then, excuse me. And then,
well, we do have a way to overcome that. If the payor had a significant amount of cash and wanted to make sure that it was, excuse me, that it was going to be used for premium payments, we do have a premium paid in advance account that is crediting 2.75%. So anytime you would do a 10 pay, you would either get and put money into the premium paid in advance account. You would get either the equivalent of paying one less premium or paying one additional premium into it there. So it's a nice way to make sure you fund the contract. Plus, it's always it's a GIC, so it's a guaranteed investment contract. It's totally liquid. You change your mind about having the money there, or interest rates go up somewhere else and you can make more money somewhere else, you can always break that contract and use that money for whatever purpose you want. You're still on the hook to pay the premium, though. That's all.
So
from another source.
I wanted to remind everyone again, we have recorded this webinar. If you've registered for this, as you are since you're here, you will get a recorded version of this. Also wanted to say this is just part one of a 3-part series. The next webinar on this will be not this coming up Monday, but the Monday after that. Again, Marty will be hosting that for us. Again, thank you so much for your time taking it out. I know Mondays are crazy, and again, so greatly appreciate the opportunity not only to talk about Iams, but Security Mutual and their importance in the infinite banking concept system. So Marty, thank you so much. Questions, you can either contact Marty. At what number, Marty?
It's 347-443-2178.
Or you can
my email, msmith. That's it.
And you can also contact myself here at Iams. Again, my name is Sandy. We'll be more than happy to assist you in any questions that you have. Again, Marty, thank you so much. I hope everyone has a safe and wonderful week.